Hey, it's Clay at claytrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is a part of the subscription service that I offer. Before anything else, a couple disclosures. First off, I am not trying to imply or make you think that every single alert that I send out is a money-making winner. No scan is perfect. Nobody is perfect. So I'm not trying to sit here and make it seem like if you sign up, then you're just going to win all the time. That's not how it works. And anybody that's trying to make you think that you're always going to win is trying to deceive you, because losing is part of the game. However, that's also why risk management, risk control, risk analysis is so important, because losses happen, but winners also happen. So when those winners do occur, you want to make sure that you have your account properly positioned to weather those losses. That way, when the winners come along, you know, your account can still grow over time. Very, very important lesson. Second, we are going to be going back a ways into the history of things and looking at the week of February 18th. Why are you going so far back, Clay? More than fair question. First off, it's just simply giving the chart and giving the alert plenty of time to kind of play out so we can see what happened. Second, it's just a matter of being fair. I mean, if you paid for something and then all of a sudden you saw that same information out there for free, you'd probably feel a little ripped off, and I would understand. So it's just a matter of being fair and letting everything play out. So with that being said, let's get started. But what you are seeing on the screen right now is behind after you sign in, and this is part of the member portal. And, you can just go to the newsletter section, and, all the scans are listed there for each week. I also email it. So it's a situation of, whatever makes your life easier. If you want to check your email, perfect. If you just want to log directly into your account, you can do that too. But inside your account is what you're looking at right now. Also, before I forget, some of the big questions I get, hey, Clay, what price stocks do you cover? What prices? Any price. Price is very low down on the list. I care about probabilities of success, probabilities of things working out. So here you're going to see, we're talking about a sub $10 stock, but you'll notice those prices are all over the place as we go. And if you watch past videos, you've seen me talk about stocks that are trading for less than a penny. And in other times, I'm talking about stocks that are over $100. So to me, it's not about the price. It's about probabilities of success that the trade might work out. And then also, when are these sent out? They are sent out on the weekend. That way you have plenty of time to go through, analyze, and put together some sort of game plan. It's not like it's a last second thing where I send something out and then you have to make some sort of rash decision. Nothing like that. You have plenty of time to think things over. So the first alert here we're going to talk about is just put it in the technical pattern category, LCI, and the good old-fashioned bull pennant pattern. So let's see how this one played out. So here was the chart and what it looked like over the weekend, and then the next candlestick you see will be when the market is back open again. And you can see right out of the gates, it actually broke out, made about a 50-cent move. So there was, depending on your strategy, perhaps some room at profits, but I'm not going to chalk this one up as a winner, because if we let this play out some more, you can see that ultimately it just completely fell apart. And there is no more annoying thing than a beautiful pattern where you get the breakout and then the breakout just totally wets the bed and down it goes. But you know what? It happens, and that's just part of the game. The good news is it's not like it was some sort of crazy drastic move or anything. I mean, this was a loss, yeah, but I don't see how this could have been any sort of gigantic loss unless you broke the rules. If you decided, nope, I'm not taking a loss, nope, I'm not taking a loss, then yeah, that loss could have gotten pretty big. But if you're disciplined about it, hence, the big learning lesson at the beginning, control your losses, manage your losses, understand risk and how to, keep risk as controlled as possible, then, like I said, on the bright side, yeah, super annoying with a fake breakout there. But the bright side there, what I don't want to say easy, but very manageable to manage your risk. That is definitely not out of the question at all. But yeah, as far as this one was concerned, was a loss, but a very manageable loss. Next one here, just kind of created a category for it, just battle approaching. So battle approaching, VRAY, and then like I talk about down here, was all about that 200 SMA sitting right below it. So that, the question was, could the price actually push up through it? So let's see how this one played out. Before I do that, though, I want to get a little bit and keep some perspective here. But this is bank rate, and this is as up to date as you can get. But you can see up here this week's national averages for these CDs. So 2-year CD, 0.94%. 5-year CD, 5 years, 1.44%. But all right, let's just look at some of the better one. Whoops. Some of the better ones out there. What is this? Let's see. Yeah, or anything. Not really. These are all pretty much right around there. But here we are. And like I said, these are some of the best. 18 months. Think about that. 18 months, a year and a half. 2.7%. So just keep in mind those numbers. 18 months, 2.7%. So VRAY going into the first day. Remember, there's that line up there represents the 200 period moving average right there. So let's see if the price could break above it and get any sort of movement with it. So right there, the break was accomplished. You can see just kind of a little bit of a pullback there, nothing extreme, came right back to life. Held up there and made that little jump right there. And that represented a nice solid move of 10.8% before it fell back over. Am I saying people played it perfectly and got the 10.8%? I'm not saying that. That's just the profit window that it moved. So maybe you screwed up half the trade and you got, 5.5% out of it, or somewhere around there. 5.5% in a matter of a couple weeks. What were those? What was that other rate? Let's see, 5.5% in 2 weeks, or 2.7% in 18 months. I get it. 10.8%, not a huge percentage, relatively speaking, to maybe other alerts that I've made and you've seen on these videos. But still, it's always important to keep things in perspective. 10.8% compared to, 2.7% over 18 months? Still a good, solid little play. And it's also helping to chip away at that loss. Now, who knows? This win in and of itself could have wiped away that first chart that we looked at that was a loss. But let's just say that it didn't quite wipe it away, but chipping away at it, but not quite all the way wiped away. So let's move on to the next one. Next one to look at here, another technical pattern, but AXDX, and pretty self-explanatory. Just a nice overall wedge pattern after a good solid bullish move. So kind of just a question of, can this thing get some more continuation to the upside? So let's see how this one all played out. So here we go. That first day got up through there, but then pulled back slightly, but nothing drastic or anything like that. And then that next day, all of a sudden, boom, beautiful move, and quite the extreme move in a very short amount of time. And that all represented an 11.4% move. And you can see it went back up there a couple of times before finally rolling back over. Again, am I saying anybody played it perfectly and got 11.4%? No, but again, let's say you screwed up half the trade and got, let's call it 6%. 6% in the matter of, a day, 2 days, 3 days, whatever you want to call it. So 6% in 3 days, or 2.7% in 18 months. Not too bad. Very, very important to always keep things in perspective as a trader. Let's keep moving. And to carry on with our kind of little hypothetical here, that first chart was a loss, that second chart was a win, but maybe a win that chipped away at the loss, and the one we just looked at, let's just say, got you back to break even. So you're back to break even now. You got that loss out of the way. You're back to break even. And now I want to look at one more chart. And this comes from a different part of the newsletter where I just throw out the symbols. So there are no charts, but the reason I don't throw out charts as well because they're all based on this course that I offer. So if you go through the course, then you're going to be able to look at these ticker symbols and be like, okay, yeah, I can do that. Okay, yeah, I can do that. One of those things where it's the power of knowledge, right? If somebody teaches you how to fish, then you can just look at a ticker symbol and be like, okay, yep, I see that. I need to check this. All right, perfect. That is how I'm going to play it. And that's how it works. But for this one, we're going to focus on EVH. Just as an FYI, that one would have been a small loss. That one would have been probably not even touched it or a no play. And then EVH, well, let's just see how this one played out. Very quickly, Clay, what do you mean by shorting? What is shorting? Shorting is the ability to make money when prices go down. Yes, so as prices go down, your profits go up. That's what shorting is in a nutshell. I have lots of other details about, well, how does that actually work? But for the point of this video, that's all you need to know. Prices that are going down, that implies that your account would be rising in value. So with shorting, you want to see prices going down. So here was the chart setup going into the alert. And just to kind of give more context for those students, hopefully you kind of see the setup here that you could play. But let's see how this one all played out. So remember, prices going down equal a good thing. So we want to see red candles now. And that first day out of the week, thing just totally collapsed. Down it went. Down it went some more. Down it went even more with that gap down there. And down it went even more. And that whole move right there was good for 28.7%. We'll say you screwed up half the trade and got 14% out of it. So 14% gain. Not too bad. But the other thing is, this is why you have to learn how to short. This is why you need to give yourself full flexibility, because by doing so in our hypothetical, yeah, you went long, yeah, you went long, yeah, you went long, and going long went to break even. But because there's also this ability to make money when prices go down, now you have total flexibility, because a price can go up, I can make money. A price can go down, I can make money. And in this situation, that, like I said, the 14% would have put you way in the green. That would have put you nicely in the green for the week. Because again, let's say you're at break even, now you're up 14%, and you're up 14% in just a relatively short amount of time compared to 18 months and 2.7%. I hope you see how, first off, kind of the learning lessons here, managing risk is very important. Don't let losses spin out of control, because they're going to happen, but if you keep them tight like we saw in that first one, then you can dig out. The next two showed the quote-unquote dig out process, and then by giving yourself the ultimate flexibility as a trader, by also being able to go short and knowing how to go short, then you can just add that much more profit potential, because this one would taken the break-even status well into the green, and that's the name of the game. So if you're interested in shorting, like I said and showed on that previous area right here, I do offer a course, but shorting is definitely something that you want to take very seriously, because you can get yourself in a lot of trouble if you don't honor rules and don't honor stop losses and all that. But if you're wanting to learn, I do offer a shorting for profit course right there. And then finally, time to join the group. A lot of benefits come with it. Yes, we just focus on the Power Profit Scan portion of it, but there's also a live trading room where I give a watch list every single morning, and then I'm very active. I make alerts, I make commentary. There's one of the rooms is just called the lounge, so there are a bunch of people just hang out. So yeah, that's the other part of it. There is a map that goes, or map, did I say map? App. There's an app that goes with it, and that doesn't cost anything more. So it's also not a situation where you have to stay chained to your computer or anything like that. You can stay in touch no matter where you are with the app, and the room is mobile phone friendly anyways. But point being, you don't have to stay chained to your computer. And the price of all this is just $99, not per month, not per quarter, per year. Do the math. It breaks down to $8.25 per month, or if you break it down for per week, $1.90 per week. If you can't afford $1.90 per week, just to keep it real, you shouldn't be trading right now. You need to be focused on other things, as in your personal finances. But because if you can't afford something, or you can't make a sacrifice of a cup of coffee a week for $1.90, then there's some underlying issues there. Because now, if this was $999 per year, that's a totally different story. But $99 per year, like I said, I know that's more than fair. And as I always say, over the time span of 12 months, I am more than confident you're going to get at least $99 worth of value. So you can go to the link right there to sign up. And if there are any other questions, let me know down in the comment section. Hit me up on social media or whatever makes your life easier. I'm more than happy to help answer your questions. But let's go. Time to get signed up.